Welcome back to the Commercial Property Podcast. And there's something really important I want to share with you today, which is more of a kind of helicopter up in terms of looking at your strategy and working out whether you would still buy the same portfolio today if you had your time over again. Now, I appreciate that you can't have your time over again, but it's really important, I think, to pause and look at portfolios because I think that we can get lost in the busyness of life, and we can we can build something that perhaps isn't actually suitable for where we want to be going forwards. And that's the reason why when I start working with board members, we start on month one. And actually, I do a pre-board strategy call with them as well. And all we focus on is, where do you want to get to? Start with the end in mind. Kind of, what does your perfect life look like, or what does great look like in 3, 5, 10 years time? And that's so important because I think we we build things sometimes that because we think it might be an exit out of something. So it's more like a push factor than actually a pull factor. But there comes a certain point when you're building a portfolio that you need to pause. And by the way, then this is by way of an aside, really, that I would recommend that you very frequently review your portfolio, look at performance, make sure that it's performing against the parameters that you want it to perform against. And not just kind of financial performance, because obviously that's really, really important, but also how you want your life to look like. Because the fact is, we aren't corporates. I've got a corporate background. I worked in corporates for 20 years. And, corporates frequently check in with strategy, and they have to, because they're answerable to shareholders and to, boards and chairmans and chief execs and governors, etc. Boards of directors rather. Um, but as individuals, as smaller businesses, it's really important for us to do the same, because there's various reasons for that. Number one is that sometimes you're keeping things in your portfolio that just aren't performing, and actually you've got properties in your portfolio where you actually looking forwards and seeing how the trends are changing, and this is especially important in commercial, but also in residential. And, especially with the new residential kind of legislation and restrictions, you're thinking, actually, I'm better to kind of exit this now, or I need to manage it. So it's by looking at those kind of sell, manage, retain decisions and thinking about whether they're fit for purpose. But not just that, it's about thinking, okay, so what do I want my life to look like? So very often when we first start building a portfolio, it's to get cash flow to cover our daily, monthly, annual expenses. When we have got that sorted, it's like, actually, what do I want my life to look like? And if you want to not be in the business as much, if you want to be more hands off, then you may need to look at a different type of strategy. And actually, obviously, it's really important that ideally, before we actually even buy anything, we are doing this exercise, because there's no point pursuing a strategy where you are going to replace one job with another. If you can actually buy assets, and I'm not just talking about commercial property, I'm talking about, other types of assets like stocks and shares or bonds, or whatever. It's always great to have a diversified portfolio. Then, but if your main objective, for example, is not to be in the business, so you don't mind kind of being in for a finite period of time, and then, you're relatively hands off, then it's a different type of strategy. And so whilst recognizing that if you've already built a portfolio, that is built and that just needs to be managed and dealt with, I think it's really important to pause and reflect and think about, if you were to start your investment journey again, would you build exactly the same portfolio? And, knowing everything that you know now, would it be the same? And so just have a think about that. Because if the answer is in your heart no, then there is potentially some action you need to take off the back of that. I've been asking investors this question over the last few weeks, and it's fascinating how many people actually pause before they're answering it. Not because they've made bad investments, actually, quite the opposite. Many of them have built really successful portfolios, but markets change, opportunities change, and like I just said, perhaps the biggest question we should all be asking ourselves is whether the strategy that got us here is still the strategy that will get us where we want to be over the next 10 years. And I think that's one of the most important questions an investor can ask themselves. And that's exactly what I'd like to explore in today's exercise. So, this question really matters because, like I just said, most investors never stop to review their strategy. They simply keep buying more of what they've always bought. They become comfortable, and success can actually stop us changing because of that comfort. We get well and truly in a comfort zone. Um, and very often, not always, but very often, the best investors aren't constantly looking to acquire more properties. They're constantly reviewing whether their strategy still serves the future they're trying to build, especially in commercial property, because things change, markets change, and I'm going to talk about that in a minute as to kind of how markets have changed and how perhaps you have changed and your hopes and dreams and requirements for the future have absolutely changed. So first of all, the market changes, and I'm teaching you to suck eggs if if you're a property investor and you don't know this stuff. So I'm not going to dwell on a lot of this, but interest rates have changed significantly, and affordability of assets. So, for example, buy to lets, single let buy to lets have become more challenged because of the rise in interest rates. Cash flow returns have become thinner. Similarly with tax, Section 24 on residential, the government just keeps increasing that. We now have a new prime minister who is talking about rent freezes. We've got the renters reform bill that's come in. And, that there's all kinds of implications in terms of the balance of power going in favor of tenants and, tenant checks becoming much more important. Anecdotally, I've heard stories of, tenants going into HMOs thinking, oh, I'll go in for 3 or 4 weeks because I can now. But not just in residential, the market has very much changed in commercial as well. So what we've seen in commercial real estate is that as bond yields moved out, and I've done an episode on bond yields, so have a listen back to that, and now with the new prime minister and with what he's saying, bond yields are now over 5% in the UK as of July 2026. And so commercial pricing is still going to remain lower because commercial property yields are linked to bond yields, but they're also linked to interest rates as well. And interest rates, we were expecting lots of interest rate changes this year, and that's just not happened. So commercial prices have dropped substantially over the last few years, but we're still seeing a bit of a gap between vendors and purchasers. So if you're looking at properties thinking, gosh, she's telling me that pricing's fallen, but asking prices are still really high. Yes, they are, because vendors have still been got high expectations. And if you ask agents sometimes about how they got to a price, they'll say to you, well, that's what the vendor wants. That's what the landlord wants. And that's not really a good enough answer in terms of pricing. So just because you're not, you've got 10%, 15% of an asking price doesn't mean that's the right price for you to buy. But I think that we are coming into a period now, perhaps not in 2026, but definitely in 2027, where at some point during that year, I suspect that pricing is going to fall further. And more importantly than that, I think the motivation of vendors is going to increase substantially. And so this gap between vendors and purchasers is going to close substantially. And the reason for that is we've got these baby boomer landlords. We've got people who've owned properties for 20, 30 years. They've done incredibly well for them. But what they've not kind of realized is that markets change. They might have had a retail unit that's performed incredibly well, but, because of interest rate rises or because of changes on high streets, it's not as good as it used to be. And they've got inflated expectations about where they want to exit. And of course, very often that's their pension plan. They're exiting because That's their pension plan, and, they want to get as much money out so they can travel the world or move to Spain or whatever else they want to do. And so, there just needs an expectation shift for these landlords. But this is one of the once in a generational opportunities that we've got. And there is this huge baby boomer landlord body who are looking to exit either through retirement, through, unfortunately, through illness, through the next generation taking over, who maybe haven't got the interest or the inclination like the landlords had. And so therefore, we've got this massive opportunity to buy these assets that haven't hit the market for decades. And they're hitting the market at a time when commercial pricing is subdued, and we're expecting it to get even lower. And so this is where this window of opportunity comes into commercial. This is where the market's changed. And as these landlords come up to refinance, they're looking at their net cash flow off the back of the finance. Interest rates have gone up, and they're thinking, well, I may as well exit. And so, there's that they're not going to be really visible on the portals, but you are going to find these opportunities by niching, all the stuff that I work with my board members on, niching by by being very targeted with your investments, by creating great relationships with agents and vendors, and negotiating these great opportunities. And of course, there's changing tenant demand. There's changes in trends. We've got AI. We've got all kinds of things happening in the market that means that commercial property is changing. But as one sector starts to fall, other sectors are rising up. And there are some strategies that are working incredibly well in the market at the moment. And, the important thing is, going back to portfolio reviews, important thing is to do checks and balances on that to make sure that, your properties are still hitting the trends. They're still in the right niche. And if they're not, then potentially looking to exit. And the other thing I think to say is that if you've got a portfolio, you don't necessarily need to buy more properties. You might want to pay finance down, or you might want to diversify to change that portfolio. So this isn't kind of doom. This isn't kind of being depressing about markets. It's just change. Change is inevitable. Markets evolve and strategies have to evolve too. And the important thing is that if you haven't paused to think about that, is to do so and think about kind of where you might want to go next. So as well as markets, so we can talk about finance, we can talk about markets, but as I said at the beginning, a lot of what we're trying to build is about the life we're trying to create. And so the question about what you're really trying to build becomes even more pertinent. This is where it becomes quite emotional, actually. What does success actually look like? It's not a kind of metric of how many properties. It could be, and everybody's different. I've worked with hundreds and hundreds of clients. When I left the corporate world in 2015, I didn't realize it at the time, but what I was searching for was freedom. And I've seen that with so many of my clients. It's like, oh, I want to have this many properties. I want to get this much cash flow. But when you actually boils down, it's freedom. And it doesn't necessarily mean freedom just to sit around all day and watch daytime telly. It's about freedom to for contribution, to give back, freedom to spend time with your family, freedom to travel, freedom, if you want to buy a Lamborghini, freedom to buy a Lamborghini, whatever it might be. But freedom, I very much find, is often the kind of driver. It could be legacy as well, which could be obviously is freedom for your next generation, so they don't have stresses and worries that perhaps you did. It could be choice. It could absolutely be choice. You can choose how to spend your day, and that is a form of freedom. And obviously, that's driven by cash flow. It's driven by money coming in. So, on your scale, on your freedom scale, where are you, and where do you actually want to be? And are you able to choose at the moment? Are you able to choose whether not to work in your portfolio, or do you have to be in your portfolio a lot, working within it? And then, so driven by cash flow and potentially less management, because if freedom's your goal, if you want to spend more time with family, if you want to travel, if you want to, give back, whatever it might be, get fitter, whatever it might be, then you don't want to be managing properties. You don't want calls at 11 o'clock at night. You don't want to know that somebody's stolen somebody else's milk in the fridge of an HMO, that you're not interested in that. And it very definitely could be financial security, financial security to give you that freedom. So very often, and I know there's exceptions to this rule, and I happen to love doing property deals, and I'm sure a lot of you listening really love doing property deals as well. But, when it comes down to it, I don't necessarily invest because of that. I invest because of what property allows me to do. And commercial property is simply one possible vehicle. It's not necessarily a destination. It's just a vehicle to kind of get to where you want to do. So rather than kind of just racing on, and I see a lot, as investors, it's fantastic because we are trained to do lots of sourcing and check Rightmove every day and everything. But perhaps the best use of your time this week could be just to pause, just to get a notebook out and say, what do I actually want to build for the future? Where do I want to be, and what's going to get me there? And what strategy gets me to the future I want? And this is why when I work with my board members, we work very much on niching. We look at locations, ease of travel to your locations, ease of building relationships, quality of the investments, quality of the catchment, the types of commercial that are doing really, really well. Like, I spend a lot of time with board clients working out niches, and they nail their niche. Sometimes niches evolve, but they nail their niche, and that makes sure that they are absolutely laser focused because they've started with the end in mind. They know what they want to create. They know why they're investing. They know where they want to get to. And therefore that makes choosing a niche so much easier. It also makes it a lot easier to say no to investments because, you are a lot more laser focused. And, I have to say, when I left the corporate world, I was saying yes to everything. I was just, there was loads of opportunities coming my way, but 95% of them just weren't the right kind of opportunities. So that learning to say no was so important. And that's what being laser focused, that's what started with the end in mind can really give you. And you can also buy fewer but better deals. I spend a lot of time talking board members out of deals. And that's because, they're looking at buying things for too high a price. It doesn't fit their objectives. And I spend a lot of time bringing people back to their goals, back to their objectives. And it's also looking through different lenses. You want to look at property through a different lens. And when I work with my small group mentoring team group, my board, we go out and do field trips, and suddenly I see clients looking at commercial property through a different lens. And the investors, I mean, this is just something to remember, and maybe something to write down in your notebooks when you're doing this exercise. But the investors who build exceptional portfolios don't simply buy more properties, they build better strategies. And, that's really important. That's why this check-in is so, so important. And, I've worked with loads of clients who have basically seen the light from this. They've gone from, kind of not knowing what makes a great commercial deal to having the knowledge and the expertise to actually see deals that nobody else can. I've got clients, and you'll hear them on this, you'll have heard them on this podcast. So Nilesh, Pani, Onki, they've done deals where everybody saw the deal. They weren't, private deals. They weren't direct to vendor. They were deals that put on auctions. They were deals on Rightmove that had been on there a long time. So everyone saw the deal. But these particular clients, because they had the knowledge, they saw the opportunities. And they knew that this was right for their niche because they'd done the work on starting with the end in mind, working about where they wanted to get to. Some clients start with no experience, but they start to think differently. They get more confidence, and they buy a property and they repeat it. Knowledge changes what you see, and that's really, really important. So if you haven't spent some time reviewing where you are and asking that questions, if you have the knowledge you have now, would you still build the same portfolio that you have built? And if not, what are you going to do about it going forwards? And that's why I wrote my private investor briefing that has just been launched this July. It's been launched recently. You can get hold of it at my website. We'll put a link in the show notes as well. because I have these conversations over and over again. I speak to residential investors who are selling their entire portfolios and looking to move into a different type of investment. And this is where I start working with people on commercial. Because I eventually wanted to have these conversations over and over again. I wanted to get all my thoughts in one place. And it isn't really a report about commercial property. Obviously, it does talk about commercial, but it's about asking yourself better questions before buying your next property. So you can you find the download link in the show notes. You can find the download link on my website as well. And I'd love to hopefully kind of make you think in terms of where you're going next. And I'd love to leave you with the same question I started with. If you're starting your investment journey today, knowing everything that you know now, would you build exactly the same portfolio? And if the answer is anything other than immediate yes, perhaps it's time to think differently, because the biggest investment decisions you'll ever make aren't about choosing your next property. They're about choosing the strategy that will shape the next decade of your life. So what do you want that to look like? And what you're going to do about it now to move forwards. So if you'd like to explore this thinking further, you can download the totally free copy of the Private Investor Briefing. It's a 15-minute read, but I genuinely believe it could change the way you think about your property investing over the next 10 years. And, if it does nothing else than make you pause and think about where you're going, then hopefully that's a big win. So thank you for coming along to listen to the Commercial Property Podcast, and I look forward to seeing you next time.